Good afternoon and welcome to the Takeaways podcast. So on today's episode, I'm with Nkahiseng Ralepeli, and to be quite honest, he has quite the bio, so I'm going to share as much of it as I possibly can. To start with, he's a co-founder of Idea Tula, which is a deep market intelligence startup. He's also the VP of product for digital assets, where he focuses on tokenization and stablecoins at the Absa Group CIB. He's also a writer and speaker, and the way I knew about his work is because I read a couple of his articles and I thought they were really, really insightful. So I thought I should bring him on the podcast so that he can come and share with us more around this particular topic. He's also a graduate of the University of Oxford, where he holds a master's degree in public policy analysis. He also holds a degree in civil law, again from the University of Oxford. As you can hear, he quite knows a lot about the topic that we're going to discuss today. So hi, man, how are you doing? Welcome to the Takeaways podcast. How are you?
I'm well. Thanks for having me. I really appreciate it. I'm looking forward to the conversation.
It's an honor to have you. So let's first start with you, right? What does your work encompass with regards to stablecoins and tokenization? Just take us through that.
Cool. So I think I would sort of break it down into two wider buckets. So the first bucket pertains to stablecoins, and there it's sort of like two parts. So we have a gold-backed stablecoin that is built on a permissioned blockchain. And so we factor in privacy enhanced features associated with that to support our clients to perform transactions without necessarily having to forego some of the privacy that they care deeply about. So that's the first component to speak to those kinds of client interests who are looking at that. And the value proposition there is across things like intraday liquidity, the ability to move funds from one part of Absa Bank, for instance, Kenya, into Absa Bank, South Africa as a client. And then we ultimately take care of the entire end-to-end life cycle of that transaction. So we do the final settlement as well. So that's the first sort of like subsection of stablecoins. The second subsection pertains to dollar-denominated stablecoins outside of that gold-backed stablecoins, and that speaks to the work that we're currently doing with companies like Circle pertaining to dollar-denominated stablecoins more specifically. And so I guess that's the stablecoin bucket. The second bucket that I look after is tokenization, and that is both token origination as well as asset tokenization. So to take your audience through it, what token origination is the idea that a client will come to you and say, I want to tokenize an asset that is unique, that is on-chain from inception. And then what asset tokenization is a client coming to us and saying, I'm holding shares and I want to tokenize those shares. So essentially, we've built tokenization as a service through an engine. And so that's the kind of work that we're doing and building. So obviously, especially the second half of what we're describing, that's still something that we're building across all of the products that we're working on. So I'm looking after sort of those buckets within product development at Absa CIB.
I want to start our conversation at like a stable coins, right? I mean, I think over the last few years, the amount of adoption, like of stable coins at the retail kind of level has been quite, like big, right? But when it comes to the enterprises, like it's not really clear how big the like adoption is. Can you take us through that, because you are obviously like in CIB? How is the adoption of stablecoins at that kind of the level, and can you take us through like a couple of the use cases?
I guess I'll split it into some of the stuff that we've seen from clients and then some of the public data that we've seen. So in terms of clients, some of the asks and use cases have been the typical sort of things, right? So we want the ability to settle a merchant or supplier who wants to receive stablecoins. Can you facilitate that specific movement of fund off of the back of a stablecoin? But we've also seen some really cool sort of questions from clients pertaining to things like, hey, I'm sitting on a bunch of stablecoins. Would you be able to give me local denominated loans off of the back of those stablecoins being collateral? And so those are some of the use cases we're seeing from clients. And obviously, because we work in CIB, those are all institutional sort of clients. So it's largely around payments, treasury and liquidity management, and then those alternatives kind of business models regarding collateral. In terms of the public data that we're also seeing, you'll see that data from Chain Analysis, they release a report often, and you can also see some of the market information from Visa's site on stablecoin in and outflows, depending on the country that you're looking for. Cambridge also has a really good website that tracks stablecoin movement. You'll see that the growth of stablecoin flows, specifically on the continent, has increased exponentially over the past few years. And we would posit that that growth, a lot of it is actually institutional players partaking in stablecoins, specifically just because of the sheer volumes that we're seeing and experiencing, from our direct exposure with clients and otherwise. So yeah, so that's how I would look at it from a client perspective and a public data perspective. I think you're going to see a lot more institutions playing around in the space for sure.
One like interesting thing, that like I took away from that answer is that you guys at Absa seem to focus more on what the client's needs are, like instead of like kind of trying to look at what your competitors or the entire like environment is doing. How like important is that in like trying to build product that really trying to solve a pain point compared to just like trying to chase like the next bright or shiny thing?
We think about that from a fundamental product perspective, that the client is the most important person when you're evaluating building products. So we build with that in mind. But it's also organizational. It's top down from our new group CEO, very clearly making it evident that we need to care about the client more than we care about anything else. So we craft and build products with the client in mind and the client user journey in mind. So that's definitely something that we care deeply about. I mean, what our competitors are doing is great. The ecosystem continues to thrive as a result of that. So, kudos to them. But we're really focused on making sure that clients who come to us and are looking for solutions across the entire estate of the bank, not just digital assets, are really satisfied with the user journey that we're offering them. And their feedback we take incredibly seriously to make sure that the kinds of products that we're building will become successful in the eyes of the client. Ultimately, our competitors, we don't service them, right? So the people that we care deeply about here are our clients.
The custody partnership that you announced with the Circle, like it initially like it focused like on South Africa, right? I mean, obviously there is like demand for that, like across like your Pan-African presence, right? How do you look towards ensuring that like you avail the service, like across your markets in due time? And apart from that, how is the demand compared to what you guys have, like in South Africa?
That's a good question. So in terms of what we're looking at from a roadmap perspective, and I think, our head of custody, Robin Lawson, speaks about this quite a bit. It's really important that we expand this to as many of markets that we possibly can in the eyes of the regulations that are supportive of that. So when we're looking at how we move past South Africa, we're weighing client interest in those markets, as well as regulations in those markets, so that we're making informed and as safe as possible decisions while factoring in, some of the client interests. So definitively, our decisions on which markets to enter into are going to be based on those kind of two conditions. That said, it's imperative that we're able to scale the proposition across all of our markets as soon as possible in the safest way possible. So we're definitely looking at doing that. And I think there was a second part to your question that I probably missed.
I was saying that if you're to compare the demand, right, how is it like compared to like in South Africa and the other markets like across the continent?
It's actually pretty tough to say that, like a direct one-for-one comparative. That's because in different markets, there are different sort of appetites, right? So pertaining to this. But if you're asking me, is there enough client demand in any of those markets? Definitively, for sure. So you look at the sort of inflows, and again, this is public data. If you look at the sort of inflows that you're seeing in terms of crypto inflows, so South Africa saw $36 billion, Nigeria saw $92 billion, Kenya saw $18 billion, Ghana $9 billion. And that's just some of the examples that I'm speaking to, right? Like Ethiopia, $21 billion, and their GDP is $105 billion. So there's very clearly sufficient client interest for us to take it seriously in all of those markets in which we operate in.
Another thing that like I wanted to talk about is the state of the regulatory environment. I mean, the exchange controls, like in South Africa, are one of the most stringent across the continent, right? One of the use cases that you stated that you plan to like pursue with the stablecoin product is to allow, like business to facilitate cross-border payments, right? How do you think of the regulatory environment and how is it like evolving?
Here's what I'll say around the products that we've built, especially the stablecoin ones, especially the gold-backed stablecoin. We've built probably what we think is the only African bank issued regulatory compliance stablecoin. We've tried to make sure that across all of the things that's required from a regulatory perspective, we still embed that into the end-to-end flow of the stablecoin proposition. So to the extent that we can, we're definitely making sure that we're as regulatory compliant as possible. Now, in terms of the regulations themselves, and I suppose your question spoke to exchange control, so I'm going to focus it on South Africa. I think that there's going to be a natural evolution of what those regulations look like. So I think that regulators are really grappling and tackling how and what best way to regulate digital assets, given their fundamental premise is they're not domiciled in a specific place, right? Anyone can create a wallet at any point and send money from any place to another place. So I think regulators are really thinking about it, and we're certainly more than happy to help regulators along the way. And the SOB specifically has been very open to like engagement around how it is that we regulate digital assets more broadly, but how it is that we think about exchange control in the face of digital assets. And so those are some of the considerations. But I definitely think South Africa is one of the countries on the continent that we've seen with significantly progressive kind of regulations around digital assets broadly, both from a SOB perspective and an FSCA perspective. So we're seeing that quite a bit.
With regards to the partnership that you guys like announced with the Circle, right? When it comes to custodianship, like the main question that pops to most people's mind, like is security, because if you look at what happened, like with regards to FTX and all these other things in the past, I think that's like a core question, right? With regards to security, how do you communicate that value proposition to clients of digital asset custody, and also like kind of like trying to talk about, how secure their like assets are going to be with you guys?
Obviously, as a bank, we've been a trusted institution by clients for hundreds of years, right? So we take that client trust incredibly seriously and we protect it very dearly. And so we just simply extend the same principles we would have extended in the traditional sense of the term and extended that to digital assets custody. The client should know that they're coming to their banking partner who, values A, the assets that they're giving us, and B, will protect them to the best of their ability. So as a principle, we don't think that this is unique to the ways in which we do banking in the traditional sense. And because we're a financial institution, the threshold of making sure that that safety is prioritized is incredibly high for us. And so we treat that with that level of seriousness. So, from a client perspective, it's intuitive, right? So if you're already giving us your fiat, it just makes sense to extend that to your digital asset.
I spoke to Rob after the partnership, like in October. He said that, the digital asset custody with regards to stablecoins, like it's only the start, and that, the product suite might like expand quite largely. How do you think about that like expansion? What other use cases do you see coming from this?
What we've seen specifically, or the products that we're working on, speaks to when we started the podcast, right? So in terms of expansion, like I said, we started looking at dollar denominated stablecoins specifically, and we started building the tokenization engine to make sure that we can tokenize a bunch of products for our clients. So in terms of expansion, those are, I guess, the immediate ones that we're seeing and that we're focusing on. So like I said, it's kind of split into three core sort of product offerings. We have custody as the foundation of that, and then we have a tokenization engine, and then we have the stablecoin pieces as well. So those are the three areas in which we're focused on very seriously, because if we don't have that focus, we might be distracted, right? So there's a bunch of things that you can do, but those are the three areas of focus. The other area of focus is institutional crypto trading that we're looking at as well. So that's, we're still evaluating how it is that we're going to be building that, but that's also something we're taking incredibly seriously as a bank, to say we need to start looking at offering institutional crypto trading.
With regards to partnerships, right? I mean, we've spoken quite extensively on the partnership that you guys have with Ripple. How, of value are they in you guys trying to bring the stablecoin product to, to corporate and like investment clients?
Good question. So how we look at it is there are components that need to sit within a bank and be owned by the bank end to end. But then there are components that we think strategically partnering up with key stakeholders outside of the bank, obviously, um, is a better outlet for us to really tap into the wider ecosystem. We obviously won't be able to do everything at one go, but we think that being able to partner with the right kind of people and the right institutions is a key component to make sure that we're driving our digital asset strategy as efficiently as possible, but also as safe as possible. And so we take even partner selection very seriously as a financial institution. So if you're asking me whether or not we think strategic partnerships are important, the answer to that definitively is yes.
If you look at the competitive environment, we already, like shared that, you guys tend to build products more for clients than to address like, like a competitive landscape, right? But when, crypto and all these digital assets started, the main kind of like, like sell point was that they're going to replace like traditional banking, right? But to see you guys as a bank, like embracing them, I think it gives you a competitive advantage in that you have like trust of your client base, and then from then you can then be able to build. How do you think of the competitive environment?
So I guess there's a two-part answer to that. So if you're in terms of competition between digital assets or TradFi versus DeFi, we don't think that that's a competition anymore. We think what's likely going to happen over the coming years and what's already happening right now is the convergence of those things, right? So into a new frontier of commercial and financial activity. And so for us, this is just an extension of products and services that we already offer as a bank that just is more digital by nature. So our position more broadly is that we don't think that tension that used to exist in the beginning of crypto still exists now. I think more and more financial institutions are partaking in the space, and that convergence is leading to, I guess, the quote unquote legitimacy of the industry. So if that's the, I guess, first part of the question. Second part of the question, second part of the answer, it would relate to whether or not I guess look at competition from other players. I imagine is what you're asking. I think that the ecosystem is still young, and I think that, and this is my personal opinion, and I think the continued growth and elevation of the ecosystem in general is a good thing in principle. And I think more and more entry participants will only strengthen the resilience of the industry. So I'm not inherently against, I guess, that competition. But what I do think is important for us as a financial institution is to remain client focused, right? Because like I said, various competitors are probably doing various things, and in their roadmap, it might be fundamentally different and might be informed by different things. And if we focus too closely on what our competitors are doing, we are going to lose our mission. And our mission isn't really to necessarily factor in our competitors. Our mission is to make sure that our clients, whenever they interact with us as a financial institution, leave happy, leave with their asks attended to. And so those are the things that we make sure that, our client stories more specifically matter to us very deeply. And so that's how we look at it from a competition perspective.
The second part of your work, like your focus is more like, like on tokenization. Just share more on what exactly that like encompasses for, like our audience who might not know much about, like tokenization and where your role kind of comes in that regard.
Sure. So, I mean, in the beginning of the podcast, I kind of hinted at this. So there's kind of two ways you could look at tokenization. So the first way is asset origination. That is unique tokens that are created on chain and that relate to an on chain asset. So those are assets that are originated on chain by definition. The second part is asset tokenization. So that's where you're sitting with a bunch of Absa shares, you come to us and say, can you tokenize these shares? Or you're sitting with a bunch of, take always shares, and you're saying, hey, there's a legitimate company that exists at the moment, and I own a bunch of their shares. Can you tokenize that? And so those are the two areas of tokenization that my role kind of looks at. And so what we've done is started building what we think is tokenization as a service, as a business model. And that's the ability for a client to come to us with a request, whether it's origination or asset tokenization, and then we would handle everything else. Obviously, I can't really talk about the proprietary elements of how we've built the engine, but safe to say that we're building it to be a malleable platform that can be flexible to the desires and needs of our clients within the safest and regulatory compliant mechanisms that we can deploy. But obviously, that's something that we're still building and we're still hashing out.
How would you rate the state of adoption for both, like the token origination and asset tokenization at the moment?
Because we're still building out the product, in terms of our internal clients, I can only tell you like what it is that they're interested in, or whether or not they're interested in this. And that's exactly what we've seen. We've seen them come to us with really novel sort of questions around the ways in which they can tokenize specific assets and the ways in which they can use those on-chain assets to source liquidity. So that's I guess, sort of one way that we're seeing that client interest and demand. But on a macro level, if you look at any of the data that you're seeing out there, so between McKinsey, BCG, and a bunch of other consulting firms, you'll see that the projection is that tokenized real-world assets are projected to be between 16 trillion to 30 trillion by 2030. So that should tell you the level of growth that's associated, enterprise-level clients who are looking to partake in the space, and how quickly in which that space is growing right now at the moment, and how quickly it will grow by 2030. If you look at on-chain data at the moment, there's a bunch of platforms where you can look at it. You'll see hundreds of billions of tokenized real-world assets at the moment anyway. And so we think that that's going to just proliferate and proliferate.
Another point that like really interests me a lot is the, amount of the content and the education that you put out. I mean, if you look at Africa, digital assets are still kind of, like a nascent topic, right? Where do you see, how do you think of the education?
The really cool thing that we've experienced is clients are already in tune, right? So they are already saying, hey, look, these are the assets that we're looking to tokenize, or this is what we'd like to do with stablecoins. So that's really been interesting for us to observe that clients are already, thinking about this stuff very deeply to sort of optimize their business processes anyway. So that's, I guess, first part of the answer. But what we take is a very hand-in-glove approach to any product offerings that we give to any of our customers across the suite of banking that we offer as a bank. And so when it comes to education of the client, we really work in tandem with the client to say, okay, is the solution the right solution for you? And if not, what can we do to build the kind of right solutions for you? So we do take education pretty seriously. We do a lot of educational sort of like outreach as CIB more broadly. I do a lot of that in my personal capacity too. But those are things that we think are important. We think it's critical that, as a financial institution, we continue to educate all of our clients to the best of our ability. But like I said in the beginning, the really cool thing about this industry is that you're seeing a lot more clients who are saying, we're already thinking deeply about this. How can we move it to the next step?
Another thing that is an like enabler of like adoption infrastructure. I think your your partnership with the Ripple was more of like like an infrastructure play. Where do you see as the state of the infrastructure for digital assets in Africa, and with regards to talent and all these other aspects, and how can we try to improve it to ensure that we fast track the adoption of the digital asset products?
It's tough to say. I think if we're talking about adoption, I think you're seeing a lot of progressive adoption. So if you look at some of the data that I mentioned earlier, especially data from Chainalysis, like I said, they release an annual report. You'll see that there's about a 52% year-on-year growth on the continent regarding flows that are coming in and out of the continent. So I think from an adoption perspective, that shows pretty organic and progressive growth where people are saying, look, I could use digital assets or stablecoin as an investment vehicle. I could use it as a payment instrument or anything along those lines. But in terms of the infrastructure itself and where we see talent going, I think that's also pretty healthy. Like I tend to go to conferences quite a bit, and I see a wide variety of people who are actively and very deeply thinking about the space and how to better grow the space and build the right kind of products for the right kinds of clients. So I think sometimes we do a lot of disservice to ourselves by saying, are we comparing it adequately to other parts of the world? But I think our growth is pretty progressive. And that might just be my personal opinion around that. But I genuinely speak to some incredible bright minds across the continent who are thinking very deeply about the stuff and are building some really cool features and really cool products that I think are going to really transform the ways in which we do financial and commercial activity. But there's a lot more work to be done on both ends. And once you start seeing a lot more institutional adoption come in, that's going to be the network effect of that, because those institutions are going to invest pretty dramatically into that infrastructure, and as a result of that, invest pretty dramatically into the talent associated with that infrastructure. So again, I'm very hopeful about the next frontier of blockchain sort of development across the continent.
Apart from the go back stablecoin that you guys already have, are we going to see any other stablecoins coming from you guys in the future?
Yeah, for sure. We are working on that. That is the only answer I can give you at the moment. But to answer your question, for sure, we think we take an approach that we want to service as many of our clients in the ways in which our clients want to be serviced. And in order to do that, you need to meet the client where the client is. And so in order for us to do and meet the client where they are, we need to be able to say to the client, this is the suite of stablecoin services that you are able to tap into. Which one would you prefer? So we're looking at building as malleable solutions as possible to encompass as many clients as possible.
As we close off our conversation, if you look at the future, with regards to, stablecoins and tokenization across the continent, how do you see it kind of evolving, and what role do you see you guys playing?
As I said earlier, because I think that there's a convergence that's happening between traditional finance and sort of decentralized finance, I think that more and more clients won't necessarily always care about whether or not they get to see a front end that looks like a tokenized front end. What they'll care about is the fundamental function that they're trying to do. So, Nkahiseng, I'm coming to you because I want to fractionalize my stock offerings because I want more liquidity. Nkahiseng, I'm coming to you because there's a real estate that I'm having difficulty selling as an individual sort of real estate property, and I want to start fractionalizing that so I can open the market a little bit more. We as a financial institution then go, okay, how can we best serve our clients and build solutions that serve those clients? And I think that that's how it's going to happen. Clients are just going to make requests. You are going to have to say, we can service those requests. But in terms of the growth of it all and what role we think we play, as I said before, right, I don't think that our role fundamentally as a financial institution changes. Because this is financial and commercial activity happening, this is just an extension of banking that we're providing to our clients. But in terms of growing the industry, we think we're doing a lot of work, both on the educational front, but also on the product building side, to make sure that we're building the right kind of products to really grow the industry. And that's why I said earlier that from a competition perspective, I'm personally not against that level of competition. I think that the ecosystem will grow as a result. So I'm not sure if that really answers your question, but that's really how I think I would look at it. I think even if we're definitely doing work around the space, right? But even if we didn't, like I said, you're seeing that organic growth in the market across the entire continent. So whether or not you partake in it is not going to impact or not impact the growth, I think the organic growth. It's then a question of, if you don't partake in it, what's going to be the impact to your financial institution? Because clients are going to go somewhere for that service.
I think that's quite, like a good way to end it. I think it's great work that you and the team are doing, both from a product POV and just the education POV, because, like, as I mentioned, I learned about you from the articles and everything that you put out. I think it's great work that you and the team are doing, and I wish you guys all the best in the future.
Thank you so much for having me. I really appreciate the kind words.